Oh, good morning, everybody. Sabah al khair. Welcome. I'm very excited about this next panel that I'm going to be moderating. The title, of course, is The Digital Currencies Opportunity in the Middle East. So there is a lot to get through, and we've got fantastic panelists. Before I delve into what we're going to be talking about and the subject of our discussion, I just want to go through a little bit of housekeeping. There is a live stream of this event, so for anyone who's watching us on the live stream, thank you for tuning in. Feel free to tweet about it, or Threads, or LinkedIn, whatever social media platform you're on. The hashtag we're using is hashtag #specialmeeting24. So if there are any takeaways that you want to tweet about, please feel free to use that hashtag. Also, this isn't going to be new to anybody, but if you could keep your phones on silent, it would be much appreciated. Since this is a panel about digitization of technology, we've all got smartphones, but unfortunately we need them to be silent during the course of this discussion. There will be an opportunity to ask questions at the end. We're probably going to leave about 10 minutes for Q&A. And I would just respectfully ask you to stick to the theme of our discussion. We are going to be talking about digital currencies, central bank digital currencies. So questions around that topic only, please. Okay, so we are going to talk about the opportunity for central bank digital currencies in the Middle East. And I would actually refer you to an IMF paper that was put out not so long ago. I read through the report, and I think it's a nice setup, a nice framework for the discussions that we're having today. It's a paper that obviously is not providing recommendations for CBDC issuance, but it just frames a discussion around what is a central bank digital currency, what objectives are policymakers trying to achieve, what inefficiencies in payment systems can these CBDCs address, and what are the implications of CBDCs on broader financial stability and central bank operational risk. So we're going to answer some of these questions not through an abstract conversation, but actually via many of the central banks in the Middle East region. Two of them, of course, are sitting with us on this panel. And what's very interesting to me is not just in the Middle East, but around the world, this idea of launching a central bank digital currency seems to be gaining speed. I myself did a small explainer piece about CBDCs back in 2021, and it got a lot of views at the time. I think it was the height of the pandemic, so people didn't have a lot to do, but it got 1 million views. There was a lot of interest in what CBDCs are. You fast forward a few years, and it's a conversation that's happening around central banks all across the world, from the Fed to the ECB to the central banks in the Middle East and beyond. So I'm not going to talk anymore. Let me introduce our panelists. To my left, Maki Yantis, the Innovation Transformation Team, Telcom SA SOC Limited. To her left, we have Khalid Humaidan, the Bahrain Central Bank Governor. To his left, we have Yazid Al-Nafjan, the Deputy Governor, the Financial Innovation of Sama Central Bank. And to his left, we have Jihad Azur, the Director of Middle East and Central Asia Department at the IMF. So we have a fantastic panel. I actually would like to start with you, Deputy Governor, because there's been a lot of talk about what Saudi Arabia are looking to do on the CBDC front. And I'm just curious if you can give us a snapshot of where we are in the process and what this journey has been like for you. Why did it make sense, or does it make sense, for Saudi Arabia to be looking at a CBDC?
Thank you so much, Jumana. Good morning, everyone. It's a pleasure having you in Riyadh, and it's a pleasure to be with esteemed colleagues in this panel. So the question on why are we exploring CBDC, I think if we go back on what Sama did, and focusing on identifying new innovative solutions to improve the overall payment infrastructure in the kingdom and increase its efficiency. And the approach of Sama has always been a practical, solution-based approach where we try to identify issues and how can we leverage new technologies in overcoming said challenges. And it has resulted in the creation of multiple systems, which include RTGS, SDAD, instant payment systems, contactless payments, and mobile payments. And the culmination of these efforts translated into a strong advancement of the infrastructure of the Saudi market. It was recently announced that digital payment as a percentage of all payments in the kingdom rose from 62% in 2022 to 70% in 2023, exceeding our initial target that we set for 2025. And also in terms of volumes, the volume of digital transactions increased to 10.8 billion transactions, up from 8.7 in 22. So a strong 24% increase. So this means that as we explore new applications and new technologies, we need to think what solutions are they providing. So when we look at CBDC, we believe that CBDC as the underlying technology of DLT and as a concept has the potential to increase efficiency in certain areas where we don't see a pressing need for retail CBDC in Saudi, given the strong digitization of our current payment infrastructure. We see an interesting opportunity in the wholesale market in improving cross-border payments. So Saudi and the G20 under its presidency in 2020, we've included enhancement for cross-border payments as one of priority areas to be explored by the global community. And it was translated in October 2020 to this roadmap prepared by the FSB and other relevant committees that identified wholesale CBDC as a potential route to improve cross-border payments. As such, and we came into the G20 having already experimented with our colleagues in the Central Bank of UAE under the Aber project, the proof of concept in using CBDC for cross-border settlement. So our experiments and a study of how the wholesale CBDC can improve the market is ongoing. We believe that it can translate into reducing the cost, increasing the efficiency, reducing systemic risks, and increasing the overall transparency of the cross-border market, if done correctly. And however, when you're doing the assessment and experimentation, it's not only about the technological solution, but we need to understand what are the potential implications on central banks' mandate and economies, mainly financial stability and monetary stability. And generally, when we look at the wholesale CBDC market, there are three models that are identified. We have the single platform, what is called mBridge. And we do have the enhanced compatibility model and interlinking CBDC systems. And at a global scale, no consensus has yet emerged on which the best model to adopt. So central banks should continue experimenting and testing the merits of each models. We at SAMA, last year we've joined, so the BIS, the Bank of International Settlement, launched in 2021 mBridge project that aims to test the use cases of the mBridge platform in enhancing cross-border payments. SAMA joined it last year as an observer with the ambition to become a full member and learn from these kind of experiences and understand what are the implications, and also look at different design choices, policy implications, and all of that. So in conclusion, we expect that long-term, that CBDC infrastructure will coexist with current legacy payment, but work still needs to be done to understand how to achieve its full potential.
You anticipated some of the questions I was going to ask you about the structure and how you were thinking about the actual format of CBDCs. And in this case, of course, wholesale CBDC is what you're talking about. The news lady in me, though, wants to clarify one thing, and that is that you mentioned that you're experimenting with it. How much time will you need to assess whether or not this will be a success if you launch it officially?
So it should take its time. We believe that there is no first mover advantage to launching, especially wholesale CBDC. And given the use case we're talking about, it requires harmonization among different participants at an international level. So it might be very difficult to say today when the experimentation level will end and we will move into practical uses, but it should be done in a coordinated manner, taking into account any potential risks on the broader economy and also unintended consequences for issuing it.
Of course, yeah. Your Excellency, I want to ask you from the perspective of the Central Bank of Bahrain, when when people hear that central banks are thinking about issuing a central bank digital currency, often the first reaction is, don't they have enough on their plates? You've got an inflation issue, you have all of these other things to worry about. From your perspective, why does it actually make sense to go down the path of CBDC when it's going to add to your operational ask on your day-to-day?
Very good morning, everybody. I'd like to start off by thanking our host, the Kingdom of Saudi Arabia, for making this possible. And I'd like to thank our partners, the World Economic Forum and the IMF, for having this very important topic discussed in a panel. I think I'd like to zoom out a bit. This is an important part of a very big conversation, which is the digitization of financial services. We know that this sector is being disrupted, and clearly digital technology is being incorporated more and more into the sector. We are lucky in Bahrain, people are embracing that change. Like Yazid said, Bahrain and Bahrainis and the people in Bahrain have used instant payments more than they did before. There's multiple indicators. One of them is instant payments per capita per month. Bahrain was the second country in the world with 19 instant payments per capita per month. And we were second only to Thailand. And based on current projections, Bahrain should be leading the world relatively soon. I think in terms of digitization of the financial services sector, central banks themselves have a role to play in furthering these efforts. And I tell my team, I think there's 3 obvious reasons why we need to take the lead. Number 1, and that's clear, we need to lead by example. We ask all our licensees to have a digital strategy. It's imperative that we have our digital strategy that goes hand in hand with what we expect from the industry. Number 2, we believe that when we digitize, and the more we digitize, and the more reports that we ask digitally from our licensees, we're encouraging everybody around us to digitize at the same time, and that's important. And these efforts need to be coordinated. Another aspect that excites me is I think a digital central bank will allow digital solutions from around the world to start to base themselves in our jurisdictions. And I thank this panel and this opportunity. It forced me to refine my thoughts and opinions where I'm at a stage where I'm comfortable enough that I'm ready to verbalize what I think about CBDC. Is if we think cash is the analog and digital currency is the form of digital, CBDC is the digital form of cash. Today, clearly, we're in a hybrid situation. We're using both. And we know in the past, when it comes to cash, central bankers were very much in control with all aspects of cash. And now we're comfortable to the point where the private sector plays a big role in the printing of the cash, in distribution of the cash, and with the private sector, we use interest rates to manage the supply of cash. The same thing is likely to happen with CBDC. Yes, the central bank will have a role, but at some point in time, the same way we don't call it central bank cash, we're probably going to stop calling it central bank digital currency. It's going to be a digital form of the cash, and at some point in time, hopefully, we will be able to be 100% digital. And we're in constant dialogue and conversations with our peers. We need to learn from each other. And I think the aspect of collaboration that's going to be extremely important for all of us is the cross-border aspect. We are open economies with a large expatriate base that's living in this country. The cross-border element of central bank digital currencies is something very important to us and could be used as an advantage if we coordinate and work together.
Maki, I see you're nodding your head, so you're definitely agreeing with what was said on this panel. Let me just ask you from the private sector perspective, how do you see the benefit of introducing CBDC versus the existing financial architecture and the fintech solutions that are already available?
Great. Very good morning, and thank you so much for having me on this panel. I'd love to build on what the governor has just reflected on and take a couple of steps backwards. I think over the last 10 years, there has been significant innovation around digital payments. And the importance of that is reflecting on why there's been the innovation and the scaling of the innovation. It's to enable financial inclusion. If you look at the Middle Eastern region and some of the other regions, at some point, people couldn't access banks, people couldn't transact in a seamless way, people couldn't send money cross-border easily. And if you look at some of the innovations within the telco sector, just through a mobile number, people are now able to access mobile wallets. People are able to transact with a lower cost in a much more easier way. That could never have happened without the amount of innovation and, most importantly, the collaboration. And because for the architecture and the guardrails to be there from a system perspective, there had to be that collaboration. Now we've evolved to what we call the API networks. So we enable access through applications, apps on our phones, and people can seamlessly apply for digital services on their phones. So I think if we take a couple of steps backwards, it's important to have the collaboration with central banks to make sure that, I think from a monetary perspective, it enables the investment that continues from private sector and the collaboration between public and private sector to accelerate the innovation, because I think there's a lot of experiments across central banks. There's a lot of learnings on the innovation that has come to ensure the digital inclusion. But this then requires a new framework that can enable a robustness of the regulatory framework within CBDCs.
Well, I guess that brings me nicely onto Jihad, because you've got sort of a steering view of all of these conversations that are going on in your role, obviously as division head, Middle East and Central Asian Department at the IMF. I just wonder how you see these conversations and also what role you think the IMF can play in facilitating some of the dialogue that's taking place amongst all of these different central banks and between the private sector as well.
Thank you very much for this session. Let me start by zooming out as you asked in your question. If you look at the regional level, and we did recently a survey, the survey is showing interesting results. 2/3 of countries in the region are in the process or exploring or planning to develop central bank digital currency, which is, I would say, a change compared to maybe 3 or 5 years ago. Second, the room to grow is still there. Of course, the region is diverse, but on average, the region has the lowest level of bankable people in terms of number of bank accounts, and also in terms of financial transactions. If we compare to Southeast Asia, we are at 40%, they are at 80%. The average in Africa is 55, we are at 40. Therefore, we have a way to go to catch up. Why it's important? Various panelists mentioned it. One, at the retail side, the retail CBDC, it's very important for financial inclusion. And not only for the locals, but also to ease the remittances, transfers, and so on, because this will also help reduce the cost of those. Therefore, financial inclusion is, at the retail CBDC, the most important target that the countries are trying to achieve. Two, the wholesale is, of course, very important, especially for the cross-border payment. And there are certain number of initiatives at the regional level, like the Buna that has been initiated by the Arab Monetary Fund. And there are also other initiatives that are promoting the utilization of new technologies, new platforms in order to accelerate. But this is also something that is important from a policy-making perspective. By reducing the level of cash utilization, you reduce the risk. You improve your ability to be aligned with international standards when it comes with AML, CFT, and other issues. When you strengthen your capacity to use platforms for payment, is you can adopt faster new technologies. The good news is that you have one of the highest penetration worldwide in terms of telecom, both in terms of internet penetration, mobile utilization, which means that the market is ready. It needs to shift in terms of build the regulation, which is very important because there are certain number of risks. I'm sure we will get back to that. Those risks need to be well monitored, managed by the central banks. You need to open a platform for different players. Therefore, you need to guarantee that you have the same level playing field for all of them. And also, you need to catch up with the international evolution. What we at the fund are doing, as you know, we serve 190 countries. Therefore, we are helping 190 countries to move into this direction. At the regional level, we issued last week a study that portray where things are, what are the priorities, how to move forward, and what are the main issues that central bank governors need to focus on. Last but not least, this will also help increase regional integration. And regional integration will allow banks to be more regional and increase their outreach, but also money to be more mobile within the region. This would be one of the ways to accelerate regional economic and financial integration and provide new investment opportunities and saving opportunities for people from different parts of the region.
That ties into my follow-up question to you, which was going to be, do you have any idea, it's difficult to ascertain, but what sort of an economic impact the advent of CBDCs could have on the region? I guess it ties into that integration, further integration is good.
Well, ranging from the specific one to the broad one. As the governors mentioned, it would require to analyze the impact of that on the transmission channel for monetary policy and how central banks need to address this. To the second issue is how to make sure that banks who are using this or moving into this tokenization of money are also having the right safeguards. Three, this would require investment and require business continuity, and therefore part of the credibility of the system will be there. Therefore, there is one important pillar, which is how central banks are going to adapt to this. Broader than that, the financial sector also will need to evolve and also will need to later on to accept competition from other providers. And this is something that would require certain rules and regulations in terms of how you supervise. Three, of course, the business of finance is a competitive business. And I'm sure that countries will compete. It's how to create synergies while competing. I think it's going to be very important, and how our financial institutions and financial system will be aligned with the best practices, because this is something that maybe now is still nascent, but in the future will be one of the elements that will determine financial sectors' depth compared with others. And again, we are in the region, we have all what it requires. We have financial depth, we have mobile penetration. I think now we need to use this for financial inclusion, which is very important for the broad inclusion. We have one of the lowest inclusion at the SME level, at the startup level, at the rural level. Therefore, those also will have not only financial benefit, but also social and economic benefits.
Financial inclusion, very important there. The other one that has come up in all of our panelists is cross-border payments. So, Deputy Governor, I want to put a question to you about cross-border. It really is easier said than done in this situation, because you're dealing with multiple different payment systems, you're dealing with different types of currencies, and you're dealing with existing financial infrastructure. So you can launch the CBDC, but you're stuck with what's given to you in the system already. How do you deal with those operational challenges? And how do you think about what the solution that the CBDC can offer versus, say, regulation or further regulation in that space?
So thank you, Joanna. This is a very important point because interoperability between different payment systems or lack thereof has been one of the impetus behind, or the impetus behind the interest in wholesale CBDC as a tool to streamline or increase the efficiency of the cross-border payments. So when we talk about interoperability, it does not. Typically, we think about it from a technology point of view, but technology is only one aspect. of it. Interoperability means that we'll need to ensure that considerations and analysis on monetary sovereignty, financial stability risks, geopolitical risks, infrastructure costs, and so on and so forth, other areas that all of which contribute to the effectiveness of any potential solution to look into to address these kind of issues. And to be able to address that, you would require international coordination, and you also need public-private coordination, given as His Excellency the Governor said, you need to engage with the market players, but also you need to ensure regulatory consistency among different participants, which can be easier said than done. Hence the importance of collaboration, and hence we find value of collaborating with other central banks, have discussions with our colleagues at the IMF, and participating in different projects under the BIS, help push these, or at least we can work toward finding solutions to these kind of challenges.
Again, one of the criticisms that comes up, or not criticisms, I should say, the concern is that the launch of a CBDC in a meaningful way could potentially be destabilizing for the financial sector, and that essentially the central bank starts competing a bit with deposits. You know, you've got your retail deposits that could be destabilizing for the banking space. I'm curious to hear, because you've spoken about, you know, experimenting with CBDCs within Saudi Arabia. What has the feedback been from the financial services sector, and what is the appetite from banks to see a launch of a CBDC?
So it's true, it can have implications, as colleagues in the IMF and Dr. Jihad said, and in the paper was mentioned as well, potential implications on financial stability, monetary policy, and other areas, including operational risk, technology risk, cyber risks. So the design has to take into consideration all of these aspects, and at the end of the day, following a solution-based approach would help maximize the benefit and mitigate part of the downside. In our case, in the case of Saudi, we've started with engaging banks with us as we work with the IMF, with the BIS and the IMF on different projects, including Enbridge, to assess their capabilities and to see what value are they finding in the wholesale CBDC. As we said, I mean, retail CBDC, in the case of Saudi, there is no real pressing need for it for the time being, but the opportunity lies there. So continued work and analysis, policy design, learning from different experiences, and engaging in discussions are key to achieve the intended objectives.
Okay.
I want to say.
Yes, I was going to put the next question to you anyway, but feel free.
Just to comment on that, 100% agree with what Yazid said. And to answer your question is the impact on banks, short term versus medium term, and is there a crowding out or crowding in?
Yeah.
It really depends, right? Yes, with certain aspects, it could be in direct competition. But it also, if you digitize and standardize something, you will allow innovation to build on that. One small door might close, very many big doors might open because of that. And that might be something that the banks welcome. There's multiple things that can be done and built on a strong, stable, secure central bank digital currency.
Well, fair on the financial system, but how do you think about, you know, the regulation that's required to ensure that this, the potential launch of CBDC doesn't interfere? We spoke about the financial system, but also with monetary policy transmission as well.
Yeah. One of the things is, imagine we start introducing an interest rate to central bank digital currency. And then it starts to look very much like we've securitized a money market fund. That could be something very powerful, is the central bank is introduced a new monetary policy tool that's more direct in nature than what we currently have. Right now, we set interest rates, but there's multiple players in between the central bank and the end user. This starts to become direct. Maybe with this, because the direct mechanism, then the moves that we have to do for interest rates to achieve the impact that we want might be smaller. This might actually suppress volatility in interest rates. That might be an overall benefit to the economy. Plus, when we reduce friction, it might actually help economic growth. So there's multiple elements to this. And in terms of regulations, I think it's clear what the panelists have mentioned is there's possibly two aspects, and we do know how to regulate this, is the security of a digital currency and the privacy.
Yeah.
We have many critical parts of our infrastructure that we know how to protect. This one will be an additional one. We have to virtually minimize or eliminate potential downtime. And when it comes to privacy, there's multiple types of educational records, healthcare records, financial records that we know how to protect. This one would be in addition to that. I think we can overcome that. But we need to do it carefully. We need to do it in coordination with the private sector, with other regulators. We all need to learn from each other to come up with a standard that we're comfortable with.
Well, Maki, I want to ask you about privacy because His Excellency, the Governor, brought that up. And again, that is one of the pushbacks that people are potentially concerned about. How much user data are you willingly giving up by signing on to a central bank digital currency? So as a potential user from the private sector, what are the safeguards that you would like to see in place that would make this CBDC become a lot more appealing to those who may be concerned about data protection or privacy?
Yeah. Thank you for that question. I think there are different schools of thought of how to implement CBDCs. If we think about technology around distributed ledgers and the potential for blockchain. And I think that's where some of the concerns have come up to say that there haven't been solid use cases that show the ability of blockchain at scale. That doesn't mean that there's not a lot of innovation that is happening within that perspective. And I think there's also traditional security, which enables end-to-end encryption. With artificial intelligence, there's a lot of technology and innovation that can enable fraud detection. So I think the biggest challenge with the discussion around safety, privacy, and security with CBDCs is the interoperability, the legacy systems within the perspective. And I think to the Deputy Governor's earlier point, interoperability, not just from a technology perspective, but from a policy, especially when you come into areas of cross-border payments. That's where the challenge when it comes to privacy and security actually arise. So in essence, we do have the technology. The issue is how do we then build onto the legacy systems and ensure that we have a robust monetary policy framework that guards against some of those potential loopholes.
Jihad, from your perspective, what are some of the recommendations the IMF have come up with in the context of what we were discussing about the financial system, privacy, monetary policy? Are there any, I mentioned a report that the IMF put out, but are there any key takeaways that the IMF would put forward to help those thinking about it?
Well, there are a certain number of broad principles, but I think one has to be also cognizant of the differences between countries. And the differences are at different levels. The level of sophistication in the financial system, especially when it comes to the retail CBDC, and the way citizens and those who are holding those accounts interact with the financial system. For those, what is important is the protection that the central bank provides in terms of making sure that all the providers of financial services that are digital are following the same rules, providing information for citizens, and help citizens move from one mode of transactioning to another mode and from one mode of saving to another mode. Therefore, there is here the level of financial literacy plays an important role, but it's an important dimension because there is part of the acceptance of the CBDC that comes with trust. But this in itself gradually will grow and will normalize the utilization of digital currency, even if those digital currencies are not central bank issued digital currencies. This is an important dimension, especially in countries where you still have low level of bank penetration. The second dimension is the dimension that has to do with enabling your banks to be connected internationally and then use the wholesale dimension in order to maintain their competitiveness. And this is also something that in the future may create a kind of two groups between those who are part of this network, who are currently, some of them are transactioning in their regional area, but some even beyond regional area. When the payment system was developed with Buna here in the region, was supposed to be, in fact, accelerating payment within countries in the region. And immediately we saw with technology that the wholesale transactions are beyond the boundaries of the regional operations. How to regulate this? Being or embracing all the new standards through BIS or through the work of what the IMF is doing is something that we encourage in the region. And this is something that the central banks are playing an important role. And this is why we issued this report that was published recently, and you have copies here. The idea is to bring to bear what are the priorities and what are the potential for the region, but also to start generating some regional approach to those issues. The third dimension are issues related to the policy. Monetary policy implementation is different between countries. You have countries who have fixed exchange rate regime and others who have flexible exchange rate regime, and therefore the management of the monetary policy transmission are different. You have economies where you have a concentration of deposit and so on. Therefore, it's very important to start internalizing how this new technology that is going to shift the way financial transaction intermediation is going to operate, to start thinking about all these issues and build the capacity within the central banks, those who are managing the monetary policy side, those who are regulating the market, those who are supervising banks, those who also are working with the service providers on how to put in place a new form that is not different from what we saw in the past. When credit cards were introduced, it had the same also transformation. When the check was introduced, also had the same impact. Therefore, we need to reinvent the way the business of central banks is done, not to change it, but to reinvent it. But again, I think for the region, and I will conclude with this, there is an opportunity because of the low penetration of financial services. And this will help increase reliance, improve the protection of saving, and also increase inclusion. And those are important issues that benefit a wide range of social groups.
Deputy Governor, I do want to ask you, and I think you kind of answered this before, but I would like to hear your take on what you're doing to safeguard the system against the possibility of cyber attacks, because that is a theme. That is a theme specific to CBDC, but how do you create the necessary safeguards in that respect?
So this is a very important point, and a very topical, as if you engage with central banks globally, they would identify that cybersecurity are among the top risks, if not the biggest risk facing economies, especially considering that economies are digitizing at a rapid pace. So vulnerability appears more. I think we look at official statistics published by the Identity Theft Research Center shows that in 2023, the number of victims of cyber attacks exceeded 340 million victims, and data breaches over the past 2 years increased by around 72% compared to the period before, the highest on record. So it remains one of the top risks that all central banks need to focus on, and as it impacts trust and confidence, which are the pillar underpinning any functioning and effective financial system, and specifically payment system. And so integrating the assessment of potential cybersecurity vulnerabilities has become a critical part in any analysis on or assessment on new technologies and opportunities provided by new technologies to improve the overall system. In the case of SAMA, we have we have a long-standing, proven cybersecurity framework that we've introduced in, I think, maybe in 2018, I believe, and managed to increase the overall resilience of the financial system while supporting its development and push toward digitization, as I mentioned in the statistics on adoption of digital. But however, this doesn't mean that we should be complacent. We should be vigilant on what are the risks, and we need to when we're embracing technology, we need to focus on the use of trusted technology and incorporate a security by design approach in building these kind of infrastructure, specific and all relevant infrastructures in the financial system, but specifically on payments and CBDC. And also, while as I said, we're seeing threats increasing in the past few years, we might be also in the threshold of even greater risks. Rapid advances in AI and AI models' access to quantum computing it means that current cryptographic standards might be broken more easily, which increases the vulnerability of digital communication, data, and all of it. So we need to think about tools and incorporate a new or forward-looking approach for what would be the future potential risks in the design of any infrastructure that might include trying to build quantum-resistant cryptography to ensure the continued safeguard of the system. And this definitely means that further collaboration on this front and additional research and experimentation, not only on the use of CBDC, but how to protect infrastructure from the emerging technology. This has been one of our major innovation themes this year, and we continue to collaborate with central banks globally on this topic.
I want to leave some time for questions, so I'm going to do a few, very quick questions, a quick fire round. But Governor, let me just ask you, within Bahrain, I think she had mentioned this topic of this idea of trust, and for a currency to be an effective medium of exchange, people have to trust it and trust its usage. How do you go about convincing people that this is going to be a trusted medium of exchange?
People are used to it. Right now, many of our payments are digital. The truth is, I said that we're in a hybrid model. There's less and less use of cash. And I think from predominantly digital with a little physical, I think the transition to fully digital is not going to be a stretch. People are used to it, people have engaged in it, and circumstances did help. Adoption rates increased because of COVID.
Yeah.
This is where contactless started to become something of a necessity, something of a safety, something of a requirement. And because of that, there is very little resistance. Trust is already there. We just need to build it in a way that makes sure that we safeguard the risks. Cybersecurity risk is a must, and it needs to be dealt with at the national level. And to counter cybersecurity risk, you need to continue to invest, you need to continue to collaborate, and you need to continue to train. With those three things, we've done it in the past. I think we should be able to manage these risks.
Maki, what would encourage you to use the central bank digital currency over another form of currency?
I'm an early adopter, so I'm not sure I'm the right person to ask this question. But I think that it's encouraging to hear about the sandboxes of collaboration when it comes to innovation. And I think there's probably an opportunity for central banks to create a much more open sandbox that allows both public and private sector innovation. A lot of innovation when it comes to issues such as cybersecurity is coming from startups, really smaller players. A lot of innovation around these topical issues is coming from really smaller players. So as much as there's investments and scaling that has been shown from a private sector perspective, it's quite important that this then becomes a collaboration between the two to ensure that we are robust enough, both from a technology perspective and from a policy perspective, that the ultimate goal of financial inclusion is actually achieved.
Jihad, are CBDCs ever going to fully replace cash?
Sorry?
Are CBDCs ever fully going to replace cash?
It depends where. I think in certain number of countries already on the retail side, it has been moving very fast. In other countries still. I mentioned earlier that there are certain countries where still the majority of transactions are cash. And we are falling behind. I think in those countries, yes, definitely this will move. Two, I think the perception is going to change because for the time being, we still focus more on digital currencies as assets. With the central bank becoming an important player, it will gain its momentum as currency. Of course, banks will watch and see how the central bank will operate. And there are certain number of issues to solve between banks and the central bank in order not to have the feeling that there is a competition between central banks and banks. There is growing interest from the region or from certain financial centers in the region to be part of those global initiatives. And this is something that I think it's the right direction. And we encourage that because those standards or those initiatives will be led by the leaders. And it's important for the region to catch up. Because again, there are risks, of course, and I think we have had here a very nice way of highlighting those. But again, you cannot be outside a major transformation in the financial intermediation industry. And it's important for the region to internalize this in order to build not only the capacity, but also the safeguards and also the soft skills to manage this big transformation. And I would say this, beyond its direct impact, it has a broader a trickle-down positive impact on the economy. And this is something that I'm sure that central banks have in mind too. Therefore, yes, it's a revolution somehow in the world of finance, but it's something that you cannot ignore, and it's important to be part of it, to design it in a way that serves your market, but also allow you to strengthen your connectivity.
That's a good place to leave it. I'm going to open up the floor to questions. So is there a mic going around anywhere? Okay, there are 2 mics. So if you have a question, please put up your hand. Gentleman over there.
Well, thank you, guys. Terry Williams, Chairman of the Global Trust Impact Capital. We're a private equity firm, and I'm wondering about the transition from the IMF standpoint. In Marrakesh, it was reported that out of 192 countries, member countries, 127 had adopted policies towards, the central bank digital currency. If I'm funding a project, hydrogen project for $100 million, I'm wondering about the transition between the fiat normally would fund the project with and the transition to a digital currency, because all of a sudden we would be at the table for a term sheet and the sponsor would say, okay, I'm going to give you digital currency versus fiat currency or USD. Do you see a time period for when the transition of digital will take over from fiat transactions at close?
Let me confess that your question is too technical for me. And maybe some of the central bank governors can have a better way to address
If
it.
it's too technical for you, imagine me. For the governors, please, if one of you want to tackle it.
I could give those 2 cents.
Huh? I could confess like jihad.
I guess it's more a question
the transition
about
is
the time
happening.
frame.
The truth is the transition is happening. Yep.
Do you want digital currency?
It's going to be a digital dollar.
Yes.
It is the same currency. It's in a digital form versus a physical form. And the transition today, you want to pay 100 million, you could pay with a few suitcases and the rest with a wire transfer, or all of it with a transfer or from one wallet to another wallet.
Yeah, maybe the caveat here is that it really depends on the design of the said CBDC. So it depends on the design choice. Different authorities will adopt. Some of them might include caps or remuneration and a lot of details that might be a bit difficult to anticipate now, and it will be subject to the sovereignty of each country.
Sorry. Gaston Miller, personal question. Not a critique, just out of curiosity. What is preventing you from furthering opening up the digital sandboxes? What are your concerns?
Is it for us, or a general one?
You have already your sandbox now.
Yeah, we do have
Our
a
sandboxes are open.
Yes, are open.
And sandbox is a very safe place to experiment. We limit the number of transactions you can do, we limit the number of customers you can deal with, but they are open, and we want people to come and encourage them to test in a sandbox. Once you observe the results, we observe the results, then technology can graduate from a sandbox into mainstream with the conditions that we think are appropriate and the regulation that will support that technology.
The question is here. I'm here. This is Abdul Wahab from Sultanate of Oman. Just one thing to comment on the person who asked the first question. You can actually, in the term sheet, as a solution, intermediate solution, you can actually limit the fiat currency transaction until the transition is actually happening. And then basically you can put it in a timeline where basically you are putting all the private equity funds into the transaction into fiat for the next 5 years, for example. And then even if the transition happened within the next 4 years, for example, or 3 years, the people who are putting the fund into the private equity, they are still limited to the 5 years term sheet that they are going to pay you in fiat. So this is one of the solutions that you can actually adopt. Another thing in regards to the people in the panel. So many countries are going into testing their own type of CBDCs, and basically when it comes to different regions, that for example the European Union or for example the GCC as an example, is there any plan, for example, for different countries? I know in Oman the central bank is also doing it, testing the CBDC, and there is a task force related to that. But basically, will it be more beneficial that countries start in phase 1 with doing more of a regional type of CBDCs? So it is not like a central bank, it is a regional digital currency that they agree to work with, and then basically they can create different variants out of those currencies that are more into the local context. So what is the comments around that?
Especially with the ECB looking at launching a digital currency.
So I agree. I think it can be easier to form collaboration at a regional level, and this is our initial approach in assessing the usefulness of different use cases for CBDC happened with Project Aber. With our colleagues in Central Bank of UAE. The project was launched in 2018. It lasted for a little bit more than a year. All the results of the project and main lessons learned and all of it were published in a comprehensive report. So I agree with you. It formed our initial understanding of CBDC work, and then the work expanded to be more under the BIS umbrella, sponsoring different projects, looking into different use cases for CBDCs.
If I may add on that, I think the strategy has evolved over time. In the beginning, the idea was to have regional approach, and then gradually central banks, those who have achieved certain level of development, felt that it's somehow limited or could limit them. Therefore, you have different geographies or different dynamics, and therefore you have alliances that are beyond the regional coverage. Also, what you see is central banks had different routes or different approaches. Some of them started with the retail dimension. I think most of the central banks in the beginning explored it from a retail CBDC as an extension to the work of increasing electronic payment system. But when the wholesale came in for mature markets, clearly the potential was into developing the wholesale as a way to accelerate the cross-border payment and integrate further their banking system into the global financial system. The last point, could you draw lessons? I think no, because the technology is also driving part of what we're seeing, and the acceptability by financial institutions is also driving or pushing central banks to go into a certain direction. Therefore, we have to accept that there is no one size fits all or one strategy that has proven to be successful.
Deputy Governor, do you want to weigh in, or should we? Governor, do you want to weigh in, or should we?
No, I think I would agree with what has been said.
Perfect. I think we had a question there. Yeah.
Thank you. My name is Zaid Bilbaji. I run an advisory business that's increasingly working in this space unexpectedly. My question is to you, Deputy Governor. Obviously, CBDCs are only a part of this conversation. There's a whole world out there of digital currencies and digital assets. In Bahrain, they've made great strides, in this world, catering to Saudi investors in the large part. We saw the huge success of the SEC's approval of digital asset ETFs in January. They will be approved in London next month. Do you see Saudi Arabia moving into that space? Because it would completely absorb all the liquidity that we see that's trying to be invested in Oman, in Dubai, in Rain, in Bahrain, etc. So I just wondered what your thoughts were in this space, because I've looked at it very closely here. I've seen the Tadawul, I've seen the CMA, back to the Tadawul, Sama, all the players. And it's very unclear as to who is holding the pen on this area, which is a huge industry. And we saw that in January with the wave of capital that went into it with the ETFs. Thank you very much.
Okay, so thank you. And I think it is a relevant point, and I think we might want to clarify that when we say we do experiment not only in CBDC but in the virtual asset space overall. But however, our approach has been a solution-based approach. So we're looking at different use cases and what problems in the market that they can resolve. And based on our studies and our experiments, the policy framework will be issued and clarified. Maybe in some of the areas you've mentioned, we don't really see a use case that serves an actual need other than maybe fueling speculations. So for us, maybe this is not what we're interested in when it comes to virtual assets. We're looking more into the asset-backed that increases the efficiency of the overall financial sector and addresses even other applications on financial and monetary stability. So that's been our approach and continues. And our work continue, and it's we collaborate with the CMA. They have the area related to market, and we have the area related to banking sector and other.
All right, time for one last question.
Hi, Mu'azz Al-Arari from Bahrain. I guess this question is kind of broken up into several parts, and it's for Governor Hameidan and Deputy Governor Nabjan. How are you thinking about how the operations of a CBDC are housed? Are they in the central bank? Is it a subsidiary? Can a central bank have a subsidiary? And with the actual operational aspect of managing a CBDC, especially for retail clients, do central banks have that current capacity, current staffing? Does that need to be changed? Because the current direction of government is more actually towards a regulatory approach and stepping back from operations, whereas this takes a different approach. And secondly, in the case of operational risk and mistakes happen, funds are transferred to wrong accounts, things like that, is there any legal recourse for people? Is there a thinking about how the legal recourse for private sector individuals could have against the central bank or the subsidy?
It's a very big question, but unfortunately, I'm going to give you 90 seconds to give an answer. 90 seconds to give an answer, yeah.
I need 30 seconds. Is the regulation for operation will always be central bank. And it could be either or. And it's likely to start off more government and then move on to the private sector. The second answer, recourse is a must. It has to be there, it will be there.
Yes, and I agree with His Excellency. I think, number one, ensuring that you have a proper regulatory framework and a sound legal base for managing and issuing digital currencies should be there. And traditionally, central banks have always operated the payment system, and I don't think that will be that much of a difference, but you still need to make sure that we optimize the operational work to avoid operational mistakes.
Well, I'm going to leave it there. Panelists, thank you so much. And also a real pleasure to hear what SAMA have been doing on the ground. Really insightful to hear about how you've been designing the CBDC, how Bahrain are thinking about implementing it, the private sector, what use cases you see from it as well. And Jihad, obviously your expertise. And thank you to the audience for all your questions. I would just kindly ask you if you could quietly leave, because in about 15 minutes there's another session taking place. So I've been told that we have to vacate the room. But apart from that, thank you very much for watching this session. I hope you learned something.
Thank you.